Hi, everyone, and welcome to the latest edition of FS in Focus. For this edition, we turn our attention to the financial services sector in Australia, where the regulatory landscape is poised for significant development in 2024. With a focus on innovation, consumer protection, and addressing emerging challenges, Australian regulators, much like their global counterparts, are actively shaping the future of the financial services sector. To explore this in more detail, I'm absolutely delighted to be joined by Phil Goulstone, who's a partner in our Australian financial services practice. Phil, it's great to have you here.
Lovely to be here.
So, Phil, for those that don't know much about the Australian market, tell us a little bit about financial services in Australia.
So, interesting market. We have 4 or 5 big banks, and then a number of tier 2s, and then lots of smaller banks underneath that. We've seen recently a takeover of a tier 2 bank, Suncorp, by one of the larger banks, ANZ. That was only cleared in the last couple of weeks. After initially being blocked by the Competition Commission. And I think some of the other banks are waiting to see what the outcome of that would be. I think that's cleared the way for more consolidation in the banking market over the next year or two, so expect to see more of that. So banking market, kind of as you'd expect, heavily retail dominated. We don't have quite so much of the wholesale and investment banking that you find in some of the other markets. Regulator landscape, interesting as well. We have a lot of regulators. We have APRA, who are the main prudential regulator. They're interested in the viability, the stability of the markets. They oversee financial, non-financial risk management within the banks and the rest of the industry, the super funds and the insurance companies. And then we have ASIC, who essentially defend consumer rights in Australia, amongst doing other things. So they're interested in retail distribution networks and making sure that insurance isn't missold and the consumer is looked after. Then we have AUSTRAC, who oversee financial crime control frameworks and make sure that they liaise with the crime and criminal enforcement agencies across the world. And then we have other regulators too. We have the ACCC from a competition perspective, I already mentioned, the OAIC, who oversee data privacy and credit reports and that kind of thing. So lots of regulators in the landscape, and they have to interact a lot in overseeing the markets. I guess we've got more regulators than we have big banks, which is interesting. One of the other things that's interesting about the Australian market is we have these very large super funds. The pensions market's very well developed in Australia. We've had mandatory employer contributions to pension funds for everybody in Australia for over 30 years. So we have one of the largest pension asset bases in the whole world. I think the 4th largest in the world, which is unusual for that smaller population, $3.5 trillion under management. So those are some of the interesting things about Australia that makes them a little bit different.
Fantastic. So a mature market, very heavily regulated. What can we expect to see from the regulators over the next year or so?
Yeah, good question. It's a year of regulation implementation for definite. We have a couple of pieces coming on the slate right now. We have CPS 230, which is an interesting piece of legislation. That's the DORA equivalent, for those who know the DORA legislation in the UK.
So digital risk.
Digital risk, operational risk, and a real step up, raising the bar in terms of operational risk management for all financial services bodies in Australia. That's going to go live on the 1st of July 2025. So 2024 is the year of implementation for those changes. And it does involve quite a lot of change for most of the banks, insurance companies, super funds in Australia. It's a particularly high bar for the smaller organisations that don't have the maturity or the teams to be able to make those changes. And it happens at the same time as a lot of the those organisations are dealing with other transformational activities, enforceable undertakings from the regulators. So lots of activity, lots of risk transformation activity on the go. As well as CPS 230, we also have FAR, which is coming into effect right now. I think it actually came into effect last week. FAR is the next generation of BEAR, which is the accountability regime, so the equivalent to SEAR, SMCR over here in Europe. And a real step up from the regulator. I think it's a bit of a statement of intent. BEAR was the previous regime was criticised as being potentially a little bit toothless. We didn't have a lot of prosecutions under BEAR. It did drive some improvement in terms of the accountability of executives within those organisations, but we certainly didn't have real action from the regulator. FAR seems like a step up. It's being jointly regulated by APRA and ASIC, and ASIC have a longer track record, a more effective track record of actual prosecution. So I would suspect we're going to see some actual prosecution under this regime at some point in the next couple of years.
It's got real teeth.
It has teeth this time around, so it will drive some changes in behaviours for definite.
And earlier you talked about financial crime. What specific initiatives are you seeing and you expecting in the year ahead?
Yeah, it's interesting. AUSTRAC haven't got any more regulation on the slate. There's no big changes from them. It's kind of more of the same if you read their plan for the year. But they have got actions underway at a number of organisations, a number of banks. If you look back 4 years, Westpac had a $1.3 billion fine, and it cost the CEO and the chair of the board their jobs. So a real impact of that. They've done a great job of making improvements there. But all of the banks have been subject to some level of scrutiny and enforcement from Austrac, and I expect that to continue. There seems to be a lot of investment. I'm not sure the regulators are convinced that that's meant there's been a real improvement in their ability to manage and control financial crime. So more of the same from Austrac this year.
Interesting. And how about sustainability? What are you seeing in terms of embedding ESG in business operations across the financial services sector?
Yeah, ESG is interesting. I think a couple of years ago we thought this was going to be a really hot topic for the banks, and they'd have to do a lot of work to dial up their sustainability strategies and make real changes to the way they went about their business. From the regulators at the moment, if you look at what APRA are saying, they're talking about encouragement and trying to encourage the way that organisations deal with this and improve sustainability practices. But encouragement doesn't have quite the same teeth as regulation. So not a huge amount of change on the go at the moment. What we do have is the changes to the accounting standards, the AASB changes around climate disclosures. That's coming into play this year and is driving a lot of change. It may well be that we have to wait until some time after that, once we've seen those disclosures go in, the changes to the way that those are reported from a financial perspective, that will start to drive changes in behaviour, I think.
So it seems like there's an awful lot of synergy between the regulatory landscape that we have here in the UK and the regulatory landscape in Australia. Would that be fair?
Yeah, absolutely. So what we tend to find is the regulations fast follow in Australia behind what happens in the UK and Europe. So, for example, DORA comes into effect January 2025. The equivalent CPS 230 comes into effect July 2025. And what we also find is that technology seems to follow the same pattern. So some of those technological disruptions and the developments here in the UK market, or the European market, or the US market take a year or two to filter down to Australia. So we're just a couple of years behind. But the great thing is we can learn from what happens in the UK and Europe, and we can help our clients in Australia off the back of what's happened in other markets.
So there's clearly a lot of change in the year ahead. What advice would you give to business leaders sat in the financial services sector at the moment?
We've talked a little bit about regulation here, but often these challenges are not just regulation challenges, they're challenges around your underlying tech and data platforms. Those tech and data platforms have to be right in order for you to meet the regulatory challenges. So that's the first thing, I think. The second thing I'd say is build strong relationships with your regulators. The regulators are always easy to deal with when you're being transparent and open and honest and you want to change. So that's my second recommendation. So the other thing I'd say is all of these regulations have been implemented previously in other parts of the world, so there are lessons to be learned from elsewhere. You're not on your own. These have been done before.
That's brilliant, Phil. Thank you so much for your insights. Really appreciate it. So it's clear there's a lot of synergy in the regulation that's being implemented in Australia with the rest of the world. And when it comes to that regulation, financial institutions can really get a step ahead if they look at what's happened elsewhere around the world. It's easy to treat new regulation as a desktop exercise, but we know when it's done well, it's an opportunity to look at your end-to-end processes, culture, ways of working, to manage risk more effectively. That's all we have time for today. Thank you so much for watching, and stay tuned for next month's FS in Focus.